Range bound. That's the word coming in from Mark Keenan of Societe Generale, but he's bullish on Brent crude, zinc and copper. He says that people are looking at gold as a good hedging opportunity and that he expects it to move lower by the end of the year.
The oil market, as far as we're concerned, broadly range-bound at the moment. But within that range, behavior is certainly very volatile. On the 25th of May, we have the next OPEC meeting that will no doubt contribute further to the volatility in the market. In terms of direction, our view is higher prices towards Q4 of this year. For example, WTI we see averaging $60.50 in Q4 and Brent $62.50. And the challenge at the moment is really finding compelling entry points into the market from a long-only perspective. To a large extent with base metals, specifically zinc and specifically copper, where we see higher prices for the rest of this year. We see copper, for example, up to $6,300 a ton by Q4, and zinc up to $3,150. So some meaningful gains from current levels. Perhaps some of the metals like aluminium are still overdone. Our core view is that gold moves lower down to 1,125 or so, average that region in Q4 of this year. And that's driven by, lackluster physical demand, both in China and India. People and clients we see are really looking at gold at the moment as a hedge, an effective hedge, potentially against the landscape of elections that we have across Europe.
All right, and back to stocks then. The Supreme Court has allowed the